Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, apologies for not being on. I mean, we've just been really busy in the room and trading this upper band ride. Now, when I last talked to you, we talked about how the bands were compressing, our Bollinger bandwidth was underneath 3, and that we didn't know whether it was going to be up or down, but that we were going to get some expansion, and that expansion was going to take the form of a Bollinger Band ride. Well, that's exactly what we've been doing since the 13th. So we've been riding the bands, you know, for 5 days, and we'll see what happens today. But as I discussed, and I was talking to my members, you don't measure them in days and you don't measure them in handles. You measure them with respect to what's happening with the Bollinger bandwidth. Bollinger bandwidth this morning is basically 4. Okay. When it gets 4.5 upwards of 5, you have to start saying whether or not a band ride is all that sustainable. I don't think we've quite reached that point yet. So there's 2 parameters that can end a band ride, and they both have to happen, and they both have to happen on the same day. First of all, price has to spend an entire Globex session, none of this RTH stuff, an entire Globex session and not touch the upper band. The second thing it has to do is break the prior day's Globex low. If that happens, then it sets the table potentially for the end of the band ride. Now, back in 2013, 2014, this would be where the bears were essentially at their most vulnerable. They would end a band ride, get it started downward for a day, suck everybody in, and then they take it right back to the upper band and go on what I call a secondary band ride. A secondary band ride is a pure squeeze. It's all pain. It just wrings everybody out who's trying to fight it, who jumped on the bandwagon after they thought it was over. It's a mess. So once this condition is met, if you're short, you're going to have to be really vigilant. Don't get stubborn. Don't be ideological. You need to be a trader, and if something's not working out, you need to let it go. Perfect example of this is what has been happening in the room. Last week, I shorted 73, and it was a positional trade for me, and I had held it overnight for a couple of nights, and we got the break Sunday night, and I ended up taking a third of the trade at 63 for 10 handles, and I kept the other 2/3. Well, what happens? The bears take it down to 58. They can't hold it. It bounces off the blue line there, the 9-day simple moving average, and it starts to take off like a rocket ship. So when it gets back up to 73, what did I do? Did I get stubborn? Did I say, wait, we're supposed to be going down here. We've gone up enough, and the bears really should be in control of this market. So, I'm not going to sit here and take this offer. But no, I cut the rest of it at even, 73. And by 2 o'clock that afternoon, we were trading in the 90s. What I did in the meantime was we were able to get long on a test of VWAP down at 65, and then we got long again on a retest of one of our proprietary levels at 82, and we rode the whole day long. So we took what could have been a very bad day if we'd gotten stubborn and turned it into a very good day. You cannot get convicted on the short side in an upper band ride. If the band ride is going to continue today, we should get another morning dip to buy, and they should grind it out for the majority of the day. That's essentially how the last 2 days have played out. If that dynamic is going to change, if that dynamic changes, then it may indicate that the bears are ready to put something together. But that remains to be seen. Right now, we're trading up around the Globex highs. The upper band today comes in, right around the 2100 area, 2098, and the bulls are going to have to get on their horse to try to engage that. But don't assume anything. Trade what you see. Just understand that the bands are still expanding, and if the bulls can continue to buy dips in the morning, price can expand right with it. and you would be looking at, a move up above, 2100 heading into the 2110 area. If the bears turn it around, it's going to be all about the blue line there, 2070. Can they get past it this time? Then they have to deal with what we were dealing with all last week, the battle over the middle band. Who won the battle of the middle band? The bulls. And what have they gotten for it? Nice, 50 handles or so. All right. Everybody have a fantastic day. Follow us at Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back with another webcast. Trade 'em well, everybody.